Hey everyone, welcome to Dime TV. I'm here today with Requir from the Cumberland crypto options team. Very excited for this episode. The market's a bit crazy right now, so I think we'll have lots of things to discuss. Good to see you, man.
Yeah,
Welcome
thanks.
to the podcast.
Yeah. Good to be here. Thanks for having me.
And thanks for taking the time in this crazy market to talk to us. I guess you guys have some flow these days, so it's exciting. Maybe can you start by introducing yourself?
Yeah, so I'm Requir. I'm work alongside the Cumberland options team here. I was at Galaxy prior on the options desk over there. So basically have been involved in crypto options, market making, and now doing a little bit more prop since the better half of the last 5, 6 years. So I've seen, all the regimes, all the highest of highs and the lowest of lows. Uh, you know, so yeah.
Yeah, the team did some research and we found out that you used to be a wrestling captain at Stanford.
That's
Um,
that's right. Yes,
so,
back in my college days, I was a wrestler. Those days, not so much anymore. But yeah, I did a fair amount of wrestling. That's actually I grew up in South Africa and came here to boarding school to wrestle, and then wrestled at Stanford.
so how do you move from wrestling to trading? Was it something you always wanted to do?
I think it's a pretty natural transition. I think trading has a lot of overlapping philosophy with competitive sports. I mean, it's a very you come in every single day and you compete and you're competing against the best and the brightest, trying to get your edge in the market, trying to be 1 or 2 steps ahead, and it's grueling and it can be very tough on you emotionally at times. And so I think athletics provided a good background to endure turbulence and be able to keep yourself relatively stable,
Yeah,
throughout the market regimes.
yeah. Do you still practice?
I do a little bit of boxing now.
Okay.
Wrestling, it's you got to give my knees a break.
Oh yeah.
Some boxing and a little bit of jiu-jitsu, but yeah.
Oh cool. Yeah. So you're a fighter. Um, and I mean you've been in the space for a while. I think you've been around even like when FTX blew up. You've been around for the ETFs launch. So you've seen, as you said, lots of different regimes. Um, what has been like the most important you think event in your career that moved the market?
That's a good question. I mean, yeah, when I started, it was the 2021 peaky top bull market. I think I started at Galaxy when Bitcoin was at $68,000. And I think I bought some Bitcoin that week, just to celebrate, celebrate the first day on the job. I probably missed the top by about 2 or 3 days. Uh, and then, we had the 2022, the Luna blow up was a very big event. We were just, I mean, there was a as a market maker at that time, we were trading that stablecoin UST.
Mm.
And I don't know if you recall, but like it went something from $1 down to 70, and people were trying to backstop it, and we were doing a lot of market making for the coin at the time, and it was just like that was some crazy days on the desk, coming in, buying and selling that thing that was just eventually turned into vaporware and zero. The FTX bankruptcy was also, as being a market maker at Galaxy, you've got a lot of balances and a lot of exchanges. So there's a lot of counterparty risk trying to get your money back, as everybody was moving coins around. That was a very high stress couple of weeks that we probably spent the full week in the office during the FTX week.
Yeah.
And yeah, I mean, and then, had the couple of two. Those were the two big ones, I would say. Probably the Three Arrows bankruptcy was also pretty impactful across the street. A lot of credit out to those guys. Um, but yeah, it's been a quick crash course of financial history in crypto, with
Yeah.
the highest of highs, the lowest of lows, lots of leverage, lots of irresponsible risk taking.
I
People
like
blowing
saying
up.
that crypto years is like dog years. Like in 1 year, you see so many different things that you just age much faster than in TradFi.
100%. Yeah.
And so how long have you
But
been
now,
at
yeah, but
Cumberland now?
now, I'll say this year it's felt like crypto has finally matured a bit.
Yeah.
Bitcoin used to live in this regime where it was flows were very retail driven, and
Mhm.
you could see that by sort of like spot up, vol up regime. Bitcoin going higher, people chasing options. Volatility at 70, people buying 1 year out $200,000
Yeah.
options. Everything was there was no ceiling to what could happen. Now, now it's more institutionalized since
Yeah.
IBIT has gotten released. We're seeing a lot more overriding flow, and it's behaving a little bit. It's actually switched regimes. Like stocks used to be more overriding and downside hedging, and you would see stocks go higher and the volatility go lower, and stocks go lower, volatility goes higher as hedging comes in. Now it's flipped. Bitcoin, in fact, is spot down, vol up, and spot up, vol down. And equities has been, this year since retail is getting heavily involved in
Mhm.
the, front dated 0 day to expiry options.
Yeah.
It's very much spot up, vol up. I mean, crazy stat that I saw the other day was that now 60% of the U.S. Options outstanding are in 1 day or less options.
60%.
60%.
Wow.
So
Yeah.
the market is just basically gamma at this
Yeah,
point,
it's a
and
huge casino.
I mean that's what some of the problem with on the crypto front has been. It's been a very low vol regime, and this has caused retail to be a bit of apathy and
Mhm.
not so interested. And they've moved over to on the AI stocks, memory
Yeah.
stocks that are doing 10-15% a day.
Yeah.
And you could see it by just all of it is gamma squeezes from retail just buying front dated options.
Yeah, which I love. I like this idea of like my background is Wall Street bets basically. I learned everything from that website. So I was here in the early days of GameStop and Nokia. I think BlackBerry as well. Um,
Yeah.
I think it's starting to happen back. It's not even like the stocks are not even shorted these days. Like just people want the upside as
No,
much as possible, and it.
I mean you've seen basically most uh short selling shops shut down in the last 5 years because
Mm,
I mean market fundamentals is very hard to go out and be like this stock is far too rich, we should short it. It trades at 1,000 times earnings. I mean SpaceX is about to IPO at 100 times revenue and it hasn't even made money.
yeah,
Same with Anthropic and OpenAI. All three of these are going to be $1 trillion IPOs with $0 of money ever made.
yeah,
And speaking of Reddit and Wall Street bets, like this week, I mean, it's getting so frothy to me. There's like we saw Space, the ticker Space, which is Virgin Atlantic or Virgin Galactic,
hmm
unrelated to SpaceX. I think at 300% because Wall Street bets got the ticker wrong and people were buying the thing. 3x in a week.
yeah.
And
What's going to happen when these massive IPOs come and these firms don't even make much money yet? Do you think it's going to suck all the liquidity from the market?
I mean, I think that's what we're seeing right now, right? Like, that's been my view for a bit that crypto is suffering this year because it's crypto does well in regimes of liquidity, low rates, Fed pushing money into the system. We're not pushing as much liquidity into the system, and we're investing a lot of money into the real assets now,
Hmm.
right? Like, there's a lot of physical build up. The last 2 decades have been predominantly software related stuff and not very capex heavy.
Yeah,
Now that we're having seeing a big rotation from financial assets into the real world economy, and crypto suffers because it's a liquidity instrument rather than a useful real world asset, for the most case. And so that I mean the best example is just Bitcoin miners selling Bitcoin to buy infrastructure for the AI build,
yeah,
right? And this is happening clearly there and also in portfolios. Like people are looking at their Bitcoin and their crypto, and it's not been performing well, and they're seeing the AI stocks 10% every single day, and SpaceX IPO is coming, the OpenAI and Anthropic IPOs are around the corner, and it's people are selling down their crypto and they're buying, they're sort of legging into this last leg of things. And so I think that it's going to be a fairly big liquidity event this summer between those three. I mean, you could tell because Google is front running them by
Mm.
issuing $85 billion of equity this week, the largest in history, and the first Google equity raise at the money offering ever, right? So
Yeah.
Google is sort of, in my opinion, realizing, look, there's a lot of liquidity that's coming, supply that's coming to the market this summer. Let's get ahead of that. And so I think crypto is going to have, it's had a fairly big sell off. Leverage is quite low. It's definitely been a favorite funding trade. Lots of people are, using IBIT as and ETH as funding legs to be long AI stuff. I think that generally, when you see liquidity tightening, like last October, for instance,
Mhm.
uh, crypto was the first one to move, and then metals, and then equities sort of come lower across the board. I think that we'll probably see something similar in the next coming months.
Yeah, I think for the past year, like Bitcoin was fairly uncorrelated to the stock market. I think we started to get that correlation back, and now that everything is going up except crypto, but also like the Nasdaq is mostly Nvidia these days, so it's a bit tricky to look at like the overall market. Um, but yeah, it's been changing a lot, and obviously, so this week is like probably the biggest crypto price event in the past year or so. Um,
Yeah,
People are saying like obviously strategy sold Bitcoin for the first time since 2022. It's not much.
yeah,
It's like 32 Bitcoins. It's like a rounding error,
yeah.
but it's still a big symbol, right?
Yeah, I mean, I think it's a culmination of about a lot of things. Like crypto, it's sort of been lagging. There's big October 10th caused, a lot of breaks in the system. It caused people and retail market makers to sort of migrate to other areas. The Hyperliquid is a great example of this. Is we've seen the volume from their crypto side of things, over
Mm.
50% of that has migrated to the traditional markets on Hip3, right?
Yeah,
And the retail is sort of, they're uninterested with crypto, could be largely because it sort of has just been underperforming everything else. And so I think this week it's mostly it's been a buildup of this liquidity regime that is, we've been in Iran for a while, the US that is, and rates have sort of been inching higher, and it's starting to squeeze the liquidity stuff on the sides. I mean, if you look at metals, gold, silver, they're starting to suffer as well. Crypto is usually the first liquidity instrument because it's the most honest and most globally traded to price in a tightening liquidity regime. And then the Saylor news kind of just added a bit of fuel to the fire. I
mm,
think people were looking for an excuse. People who were long crypto were looking for an excuse to sell it, given that it's been underperforming everything else. And so, I think that just that fueled this last leg lower. A bunch of people are shorting it. I think that we're getting closer to the bottom for crypto. I think it probably will bottom Bitcoin. That is around 55K.
yeah,
It usually bottoms first, consolidates, and then I think we'll see some follow through from equities. As we're seeing rotation from these very frothy high stocks. Some of these space stocks that have run up that are trading at crazy valuation in anticipation of SpaceX. Like that stuff flows into the SpaceX IPO.
yeah,
And there's a ton of like index rebalancing that needs to happen for the new rules that we've instituted. So it's gonna put some pressure on that stuff. But yeah, I think the Sailor selling is not that big of a deal. I think that he'll probably end up shoring up some cash again. Maybe this week even. He was, we saw that MNAV from MSTR Bitcoin compress a decent amount.
mhm.
I think there's a good chance that he took the opportunity to sell some at the money shares to, if he raises $1.5 billion this week, the market is going to be very relieved, and I think you see a crypto bounce next week.
Yeah. Do you think there is lots of risk around these leveraged Bitcoin treasury companies?
Uh not some. I mean, Saylor's got 6 months of runway as it stands, and if like his obligations are somewhere around 900 million a year on the perpetual debt, and then he's got a few converts that unlock, but it's not that much liquidity for him to sell 2 yards of Bitcoin. If he sells 2 billion in Bitcoin, even if it's down here, then the market can calm down because okay, now he's got enough cash. Now, his stock might get punished because, he's basically uh short gamma trading, buying at the top and selling at the bottom. So I think he'll take the advantage to sell the MSTR shares at a premium
Mm.
and basically build that liquidity buffer again, and then I think the market will sort of move on from this narrative.
Yeah. And so you're sitting on a vol desk these days. What have you guys been seeing this week? What can, like, obviously we can all look at the price action of Bitcoin, but there are many interesting things that we can see on the option or volatility perspective. What's been happening here?
Yeah, I mean, it was quite surprising to me how quiet the surface was on the first move lower from sort of 80K down to 74. I mean, the surface implied vols were sitting at the lowest of the
Mm.
year down at 72K when crypto was underperforming. As stocks were making 2-3% higher every single day, and crypto was moving down. To me, that was like sort of the you know, big alert was now crypto was no longer just hanging in there, it was moving down with equities moving higher.
Yeah.
Um, and so people were a little complacent just because, I think people aren't looking at crypto so closely, given the price action has been kind of dull. And then this last week, we've seen the surface finally explode. People are coming in and buying a bunch of downside. I think there's like a mix of hedging, big crypto portfolios, and other CME speculators. We saw a chunk of 4 or 5 thousand units of blocks go through on the CME front. I think
Right.
that's more big portfolio hedging using crypto as the weakest asset at the moment as a hedge for portfolios rather than protecting a crypto portfolio. But then there were some of the crypto natives as well that are buying protection against the other assets.
Yeah. Yeah. I think yesterday was the biggest day of the year so far on Deribit.
Really?
I think so. Yeah. I'm not 100% sure, but I think it was so. Like October 10th last year was probably one of our biggest day, and October overall was the biggest month.
What were some of the notable sort of flows that you saw over there that I might have missed
What?
on Paradigm,
Yeah.
like yesterday, a big volume day, right? I
Yeah.
mean, I saw a bunch of puts exchange. I mean, I saw surface lifted across Bitcoin and ETH. Is there anything that you saw that was like sticking out that was notable?
I think something that's interesting for us is that the share of the flow that we're getting from structured products increased a lot
Okay,
in the past year. So like we see like Swiss private banks getting more active, a bunch of family offices, and ultimately that flow we get some of that on Paradigm.
okay,
And obviously, like when you're sitting on a structured product desk, the big volatility event like this are like the best day to call all your clients and try to sell them any type of structure that will benefit from high vol. Because obviously you get better coupons, but you also get higher margins. So like when I used to sit in equity derivatives, COVID was like the best thing ever, like the most intense event for all the desk. So like yeah, there is no pandemic. You have to come to desk and call all your clients. So yesterday we saw a bunch of these guys trading a lot. So maybe
okay,
rolling the call, the auto callable structures, or just selling more products actively. Um, on the hedge fund side, not that much, but it was also lots of maybe more sophisticated guys trading yesterday because like high vol, so lots of interdealer flow. Um, Nothing really stood out. Like I think one of the interesting things is we saw some massive put prints like a few weeks ago.
okay.
Uh,
Yes, yes, I did see those
I think
coming through in the
everybody saw
markets.
those like a few thousand Bitcoin worth of puts.
Yeah,
So I think this guy didn't sell, so good trade for him. But there are not that many, like we haven't seen that much downside directional flow in the recent weeks, except this specific print. So
Yeah, I mean,
the
I
market has
like
been standing by
after
for weeks, basically.
yeah, after the January after October 10th and then the January events, like leverage has gone pretty wiped out in crypto.
Yeah.
There's very little of it left, and there's less like need for downside protection is my feeling, right? Like a lot of people are sort of in this if you're long this stuff down here, ETH, Bitcoin, Solana, uh you're sort of you're in it to keep it for the long run, and you're not really trying to hedge Bitcoin at 60K, right? Like we're 50% from the highs and stocks are at the highs. It's less interesting to be like, I need to buy downside protection for my portfolio here. So yeah, I think that's the case. That's why it's kind of been more muted than prior. It took a little bit more to get the downside protection, downside skews to pick up.
Mm.
Even now, yeah, I think you'll probably see that normalize pretty quickly in the next couple of weeks. I think again, I think the SpaceX IPO, like it might be an interesting event for crypto, just given that I think it feels to me like it's very shorted and used as a funding trade to get long this stuff. And I think you can start seeing that funding trade unwound, you know, the weeks ensuing the IPO, and crypto then becomes more supported, consolidated, and bottoms out, while equities move lower because you're seeing more rotation from
Mm.
retail pockets into the SpaceX thing. And usually once you see crypto outperform to the downside, people start covering their shorts, and people start putting in positions for a bounce, and they start and people my retail friends are looking at it now and pinging me and asking me, 60K is at the level, to buy. Like, I think people are becoming interested in buying the dip here on the crypto front. So I really think that we'll find the lows of crypto in the next couple of weeks.
Yeah, yeah, it does feel crazy. I think like 6 months ago, or like when Bitcoin was around 120K, people felt like it was too late to get in. Like we would never have this window to get in forever. And actually, just a few months later, it's back. And we also like some very big events are coming in the US, I think, in the coming months with the Clarity Act. Hopefully, should get some more of the US players involved in the crypto space. And we also have the midterms coming up.
Yeah, yeah. I think those will be interesting. I mean, like the banks moving to adopt crypto on balance sheet, Bitcoin backed loans, this sort of stuff is pretty significant, and growing the adoption. And like on the infrastructure side, that we're seeing a lot of progress. Like the banks, the payment guys, Visa, MasterCard, Stripe, Goldman Sachs, they're all moving towards the stablecoin infrastructure layer.
Mm.
I think a lot of crypto people feel frustrated because the the token prices haven't necessarily realized a lot of um, appreciation because of this growing adoption and regulation that people expected coming into this Trump regime, right? They were like, oh, okay, the regulations will be more friendly towards crypto, institutions will adopt. All of that is happening, but our token prices aren't going higher.
Yeah,
Ethereum's not going higher. Solana's not going higher. Uh, where I think a lot of the institutionalized permission crypto is doing well and benefits from this. I'm thinking of like the Circles and the Coinbase and these guys who are lobbying heavily in Washington. They're the big beneficiaries of this regulation. Um, but ultimately, like once this stuff moves along a bit more, and I think you just need a little bit of time for adoption in this stuff, like the Ethereum and the Solanas and the layer ones are going to be productive in moving these assets globally, and Bitcoin to me remains the soul in this world of AI adoption and growing security concerns across everything.
yeah,
cold storage Bitcoin is the best way to move liquid money around still. I
Okay.
mean, I think one thing for that, is positive for Bitcoin is, the Tether going and freezing a bunch of USDT that Iran was using during the
Yeah.
um, Strait of Hormuz crisis is that's a big positive for Bitcoin because it's a negative for Tether because they're just basically showing themselves to be U.S. proxy CBDC in this
Yeah.
instance. They're picking sides in a war that they shouldn't be picking sides in, and freezing stablecoins.
Yeah, that's a good point. Are you looking into Zcash as well?
Yeah, I looked at it a little bit. I mean, I don't know if you saw the headline today, but
Yeah.
they just had they had some they had an issue this week with I mean, the problem with Zcash is the low node count, and it's not as decentralized, and it's not as robust infrastructure as Bitcoin. It is, it's privacy. It is privacy related. And I think the privacy narrative does well in crypto. I mean, we're moving to a bifurcated world where China and the U.S. are sort of unwinding supply chains, and people are becoming more regional. And moving around money is going to be, it's becoming more and more of a privilege with a
Mm.
lot of capital guards coming from different countries. I mean, China just this week is pushing their domestic investors to pull away money from other markets, right? And bringing it back to China. And then the US and China are sort of instituting rules on what companies can invest in what. The Meta merger in China got shut down. So I think that the privacy layer on the crypto front is very attractive for people to move money around, with this increasing capital constraints.
Yeah.
So
Um,
yeah, I think Zcash is a good sort of like it's a good portfolio asset call option, next to Bitcoin to have. Um, it still has some adoption issues for sure and some potential security concerns around the node, but it has a worthwhile thesis.
yeah, definitely. I'm very bullish on everything that is privacy related because I think ultimately that's what we need. And being French, also like so many security concerns with everything related to crypto. So the privacy coins, I can see them having like a very bright future.
Yeah,
Um, Even though the
yeah,
government don't like them usually.
yeah, it's interesting. Yeah, I mean, this is sort of I think we'll see more of the speculative like in the past we have had a lot of highly more expensive speculative coins to retail dominated stuff like XRP and Cardano do very well relative to the value that they're adding to the
Mm.
ecosystem. I think, not to like speak poorly of the ecosystem, but they're worth 15-20 billion dollars.
Mm.
I think we'll see some money reshuffling from those more expensive coins to more value coins, and it's going to be less retail dominated in the future and more value oriented, and privacy is going to be one of the big beneficiaries of this regime.
Yeah, yeah. I don't really believe in a comeback of most of the altcoins. So I guess the liquidity will have to flow away from these vaporware coins that have been around for too long now and maybe flow back into Bitcoin.
Yeah.
I think that's what's gonna happen most of the time. But also, if like all the altcoins go to zero, I don't think they will go like in a snap. It will take some time um, for them to go lower, and then it might have like some wider market impact because all of those coins are held by retail. Um, so if they actually make a significant move, I'm curious to see how the market will actually react.
Yeah, I have a feeling that Bitcoin will sort of find a support base around 55-65 zone, and you'll see more and more of just the altcoins slowly bleed into Bitcoin. People, I mean, there's inflation in these coins, and when there's not speculation or easy liquidity going around in the system, the bleed is generally lower. Like look at Charles Hopkins stepping away from, he's taking a break from Cardano, for instance, right?
Mm.
This week that was announced. I think you'll see more and more of those type of more speculative, highly valued crypto tokens flowing into Bitcoin. Bitcoin dominance sort of increases as the consolidation period happen, and then eventually we'll find ourselves to a place where the liquidity environment improves again. Rates come lower. The Fed starts printing money for some reason,
Yeah.
as they always do, and then you could see those more speculative coins probably have a bigger rise. And Bitcoin dominance going lower again. But for the time being, that money flows into Bitcoin, I think.
Yeah. To speak a bit about your career, so you started out at Galaxy, which is one of the largest crypto native investment bank, if we can say so, and now
Yeah.
you're at Cumberland, which is the DRW, one of the biggest TradFi trading firm, crypto branch. Um, are there any like big differences between these two, like in terms of how they approach the market, how they work with other counterparty? Like what would be the main differences since you moved here?
No, I mean, I think both of the guys are big market participants, especially on the OTC front on Bitcoin, Ethereum options. And I mean, anything really. They take down big block sizes. The approach is maybe a little bit different. You see it more of like systematic strategies here at DRW than, you know, Galaxy's probably more traditional investment bank type model. Galaxy was also more, here at Cumberland on this options desk, it's mostly focused towards options and counterparties. Galaxy was a little bit of a startup, do everything type thing. We
Yeah,
were working on FTX bankruptcies, big blocks. They took down like $8 billion of Bitcoin last year from that whale. Big block trades, like spot block trades like this, or you know, um, structured products on any coin, that type of thing. Cumberland is probably a little bit more narrowly focused on the
yeah,
options front. I mean, it does have a spot desk, which I overlap with in some part, but not don't work alongside them too closely. But for the most part, I'd say it's pretty similar. The guys are both very competent and sharp teams.
yeah. I think Cumberland started out in crypto in 2014, right? So
Who's
it's one
that?
of the Cumberland started in
Yeah,
2014. So
yeah,
it's one of the earliest move from a TradFi firm into crypto.
yeah. I mean, I think both Don Wilson
Yeah,
and Mike Novogratz are like very early on the crypto trades. I mean, Don has his Canton project, which is, sort of very much in line with the privacy theme and institutions using it. I think that was pretty, intelligent foresight from him to move into doing that. I mean, that area I think will do very well going forward. But yeah, same with Mike. Like Mike was bought Bitcoin probably down in 2012 and Galaxy was 2016. So both of the guys have been involved for forever, and still the number of funds and institutions involved has grown significantly for the Bitcoin and Ethereum, especially on the IBIT front. We're seeing the Citadels and the Jane Streets become very competitive on that side. Um, so the pie's been growing generally, but I think, which is a good thing. We want and Bitcoin has sort of cemented itself as a big macro asset. People use it as speculation alongside gold, interest rates, liquidity, um, and it's good to see. I mean, we saw last week or 2 weeks ago, we saw $1 billion Bitcoin block hit IBIT. I don't know if you saw that.
yeah,
Did you saw that headline? Yeah, it was like 150 bips to market dump $1 billion of Bitcoin. That's pretty crazy how far we've come in terms of liquidity to be able to sell $1 billion of you know back in 2022. I remember if like a Mt. Gox wallet moved $1 billion of Bitcoin, we'd be down 6% in the next 3 minutes. Now the liquidity books have become more robust around the asset class, and it's also stabilized the volatility a bit, which makes institutions more interested in owning this stuff too.
Yeah. In terms of like the what would you say is the main edge of being at a firm that benefits from 30 years of experience versus a crypto native firm?
It's an interesting question. I mean, in terms of the market making or on the
Yeah, in terms
options
of like
front,
you're a trading firm basically. So most of the crypto native firms have been built by ex TradFi firms. Like we see lots of ex Optiver guys, Jane Street guys doing their own crypto prop shop.
yeah.
Um, and Cumberland is inside of DRW. It's like the same building, lots of the same people moved internally and laterally. So you kind of, how do you actually benefit from that?
I mean, what I'll say for Cumberland and DRW is they've got the best systems in the world that I've seen. Right, like we have teams that focus on making sure that our quotes on CME hit the tape before anybody else. Like, studying microwaves on wiring to get it there first, right? So the
Yeah,
systems there are world class. Everything from the tech side to internal systems are, because of DRW's long history of being there. It's like it's the best that you can get, and then you also have some of the brightest guys in the world there that have switched over. I think it benefits very well with the mix of like crypto natives that are also there in Cumberland that know the more ins and out of the crypto
yeah,
side, how to read blockchain explorers, how to look, like the more crypto related side of the things with the mix of the TradFi systems has created like a wonderful mix to be quite successful and win a lot of market share in this stuff. Our spot desk handles a tremendous amount of the flows across most exchanges, most of the traditional stuff, everything, right? And it's it's not a high bureaucracy like the big banks, so people can move quickly and set up different exchanges and set up different opportunities, which I think is a big positive at something like Cumberland.
yeah. I think we're seeing lots of like the more of the TradFi firms starting to follow the path. So we've been hearing about like Citadel coming to be more active into crypto, jump tradings. Jane Street might be coming back as well. Do you think that will push out lots of the crypto native firms to maybe do more risky projects if they cannot be competitive anymore on the majors, for instance?
That's an interesting question. I mean, they're going to eat into the profits for sure, and so I mean, if you're a crypto firm, you got to either adapt or die, and so you move on to trying to, and that's sort of been, I think, part of the apathy for the crypto community this year is that like strategies on chain, like running liquidity pools or yield strategies, like because liquidity has sort of been leaving with the lack of price movements, like it's
Mm.
been harder and harder to generate yield on chain doing those more traditional crypto native strategies, right? So we need a bit of interest and liquidity to come back. I'm talking about like the Aave pools and the Uni pools and or the dark pools on Solana, this sort of stuff for the crypto native guys to get interested in and push liquidity there and balance sheet over there to make money. Usually what happens in these bear markets is like a lot of the smart guys they leave to the more interesting stuff, AI or and this stuff, and it takes a while for crypto to consolidate, and then once it's very correlated to sentiment with just price action, which obviously makes sense,
Yeah.
and then once price action increase and retail activity comes back a bit, those opportunities become more interesting, and you'll see more firms pop up to and get back involved over there.
Has Cumberland been active in DeFi much?
Yeah, Cumberland's got a DeFi presence doing making a lot of markets on different tokens and stable coins across the ecosystem. That's more on the spot front of the desk, so not something that I see on a day-to-day basis, but they're very actively involved. I
Yeah.
mean, they're doing a lot of the they do a lot of the token they deal with a lot of the projects to be a liquidity provider for tokens as well across DeFi and centralized exchanges. They're usually one of the the big three to pick from. So yeah, they're it's quite active.
Yeah, I think this year might be the year where we see the most actual institutional adoption, not only of crypto but also of DeFi. And one of the main products that we see getting a lot of interest is Vault.
It's Vault.
Yeah.
Yeah. Okay. Interesting.
So
In what way?
So, for instance, like basically, lots of the crypto firms have been looking at vaults for years, but it's starting to be in a place where the vaults are now more powerful than ever. So you can run actual sophisticated strategy from vault. It offers lots of flexibility for the allocators. Like instead of running through a hedge fund and lots of admin paperwork, you can just allocate money into a vault. You can have very specific risk limits and everything. So we've been seeing obviously lots of the crypto native firms looking to get more active in vaults. I think Wintermute did a big push in vaults in the past few weeks.
Okay.
But I was just in Paris last week and I actually spoke with a bunch of larger institutional guys who are all looking into how they can actually benefit from DeFi and vaults to enhance operational flexibility, basically.
Interesting. Yeah. I mean, I think capital is gonna move on. Like the Hyperliquid has proven to be like an extremely good case study on just like the 24-hour markets, right?
Mm,
Everyone is pushing to get involved in creating synthetic or tokenized assets that trade 24/7. Unfortunately for the equity guys that have been trading equities for forever, I think the model is moving to 24/7.
yeah,
Uh which us crypto guys know is not good for it's not good for weekend rest. Um but everyone's moving that way. You see the Nasdaq, ICE, like everyone is pushing to set up these exchanges. Um, so that's going to certainly be a big winner, along with the prediction markets. They're getting a lot of interest, but the what was fascinating was the Hyperliquid's accuracy with the pre-IPO trading for the last couple of times. Cerberus was the first one. They're now doing SpaceX,
mm,
right? You're seeing the people are Bloomberg is monitoring SpaceX markets on Hyperliquid, right?
yeah.
To look at sentiment beforehand. So I think there's a lot of interesting developments on that front and the tokenized front that is, to your point, in the next year or two is going to see tremendous amounts of liquidity flow that way on chain.
Yeah, and to take a step back on the maybe on the options market in general, do you think retail will ever trade crypto options, or do you think it will be sucked away by prediction markets?
No, they'll definitely be back. Like they're they love the 0 day to expiry options, and IBIT gets tremendous amount of that flow from retail. I think you need a little bit more of a narrative shift and a pickup in enthusiasm. Um, and the liquidity there and the order books are much thicker than on the prediction markets, and the spread is thinner. I mean, you can get in and out of IBIT options for minimal spread.
Hmm.
The prediction markets, on the other hand, at this point in time, is much wider and a much bigger cost. So I think certainly like on Paradigm, like and I bet like these options are cyclical, and retail sort of enthusiasm for it comes and goes. The prediction market serves a different purpose in my point.
Okay, and do you think retail? So these days, for instance, there is not that much retail activity. What do
Yeah.
you think is the missing piece for retail to actually start trading crypto native options?
But has Deribit in the past been dominated much by retail? Because retail, they've always preferred the perps, right?
Yeah.
Like it provides a lot of leverage, and you can get 20 to 1, 50 to 1 leverage on the perps, and it's easier to understand for them than the options risk. I think that I think that the retail sentiment and that activity is more ebbs and flows in the perp market than the options. Institutions will grow and continue to pick up on. I mean, what's interesting is that the CFTC approving the perpetual markets in a couple of weeks ago for Kalshi, right?
Yeah,
So now this means that and I my view is that this will increase perp trading in the United States, and it will increase options on top of the perps, and will grow the whole pie for everybody. And I think you'll see more institutions uh, now trade adopting the options and trading on this stuff on a 24-hour basis. I mean, perps are a much better instrument than term futures,
mhm.
and it should have been a no-brainer to approve this for a long time ago. So I think this will be very positive for adoption on the retail and institution front.
Yeah. Do you think AI will change much of the current trading ecosystem?
Yeah, sure. I mean, I think it's going to be easier and easier to set up automated trading systems, and it increases more flow and liquidity on a just new trading systems, new trading strategies. Like
Yeah.
I think it just grows the liquidity.
So
Honestly,
what we believe essentially is that right now you have retail and institutions, right? It's like the two type of traders basically, to
yeah,
like some degrees of sophistication. And now we're seeing like a third actor coming in, and it's agents. And agents can be driven by retail or institutions, but essentially instead of looking at some weird order builder or like a wall of screens, you could just talk to your agent and say, hey, I do believe that the volatility will spike. What should I do? Your agent tells you, and then you can just talk to your agent and say, yeah, just automate this strategy and trade for me.
absolutely. It makes trading easier. Well, it makes makes it more competitive. It makes more liquidity move back and forth. Uh, but yeah, ultimately, I think that will be a positive development for more trading. But yeah, that's interesting.
Yeah, that's one of the product we've been building even here. Like one what the CEO of Paradigm has been trading a huge amount of money on very weird volatility selling strategies recently.
Yeah,
And he was saying basically he would have never done it by himself, like just clicking buttons or even with API. He would never have trusted himself to move that much size. But using the terminal, he was just saying like, "Hey, this is my view on the market. Make the strategy, run it, and that's it." So you can just run this type of strategy. I don't think he's been doing that well in the past few weeks, in the past week, just for selling vol. Um, but he was having fun with it. So
yeah, okay, yeah. I mean, that's good to hear. I think definitely you'll see more and more adoption from that front, which is good for
yeah,
liquidity.
definitely. Like all the exchanges have been pushing very hard in that direction as well. Like everybody has been building MCP connectivity to the agents. So it will be an interesting market, and it will definitely create lots of trading opportunities, I think.
Yeah, yeah. Well, vol is back for crypto, so yeah, we'll see. We'll see how it goes.
And maybe a question to wrap this up. Do you have any trade that you're looking at these days that might be overlooked by the market?
Any trades that I like?
Yeah.
Well, sort of relative to my view that I was expressing to you, that I actually think that a lot of liquidity has been moving from crypto into equities. Crypto's been a relatively easy funding trade for a lot of this stuff. I think that SpaceX, OpenAI, Anthropic related IPOs is gonna be a close. It will be close to the bottom for Bitcoin in the very least, and we'll see sort of unwinding of funding trades. Maybe you see a little bit more liquidity flowing from it, but if you get down to 55K and the skews are still as rich as they are now, like I think a great trade is to sell some puts and buy some calls. I'll be looking to do some of that stuff. Maybe call spreads,
Mhm.
because you just generally that you don't want to be too exposed to Vega on the top side because people have been very in favor of overwriting. But I think risk reversals will be, and even now it's a good time to start working into some of those. But I believe the leverage is too low in the system for, and the Saylor concerns are too overblown to merit the put skew to be so steep to calls here.
Okay, yeah. Okay, we'll be waiting for that bottom then.
Okay. Yeah. Well, it's good to chat. It's good to catch up.
Yeah, thanks for coming.